Welcome back to Fast Market here on the Schwab Network. It's time for a cash tag segment. For that, let's bring in Megan Brantley, Vice President of Research at Likefolio. Welcome back to the show, Megan, and happy Friday.
Thanks for having me, guys. Happy Friday to y'all, too.
All right, so we're talking Uber. I kind of wanted to hit on this one. We've seen a pullback in a lot of the names around the travel industry in recent weeks and months here, especially the airlines. We've gotten some earnings from them. But it seems like if you look at some of the retail sales data, going out to restaurants is still really popular. TSA numbers are still really good. You need those rides to and from the airport for Uber. What kind of data are you guys seeing? Does it support the 73% gain that we've seen so far in Uber shares this year?
Yeah, so I was actually really excited whenever I saw you guys wanted to talk about Uber today, because our data is actually looking pretty positive for this company. Whenever we look at this, you can slice and dice it a couple of ways. The first way we can look at it is in terms of ride hailing. And whenever we compare it versus probably its most competent competitor, Lyft, there's really a divergence here. It almost looks like, the path diverging in the woods, if you will. Uber web traffic is up by about 9% year over year. Lyft is starting to trend down, so we're trending in opposite directions. And then when you just look at overall consumer mind share, I think this chart is really powerful, because when consumers are talking about ride hailing, this is kind of how it shakes out considering these two. And this is a pretty significant, I think, nod to just the prominence of Uber. I think it also speaks to the company's overall strategy of saying, we want to be a mover of things, not just a mover of people. We want to, deliver your food and potentially be a last mile delivery partner across the board. And so I think that this bodes really well long term for Uber, that their strategy of offering consumers multiple delivery points, whether they want to catch a ride or have that McDonald's delivered, is starting to resonate and really work for the company.
Megan, there's a lot of things that are working in Uber's favor. Demographics. 2/3 of their users are between the ages of 16 and 34. They don't own cars. They like to go out to eat. They like to go to concerts. They like to go to vacations, and they don't use cars to do that, Megan. And why are they moving away from Lyft? I don't know, but it appears like because they move more than just people. Lyft moves people. Uber will basically move people, food, products, basically anything you want from point A to point B, they'll move it if you pay them. So the long term is doing much better than a lot of people expected, because it looks like they're getting enough volume to get them near profitability. But remember, they had a big move last quarter on profitability. Can they keep being profitable, Megan? Are we getting closer to this company being profitable? Because the numbers you put up are impressive, right? Lyft, that fight is over between Lyft and Uber, but can they make it is the question.
I think that one thing that we haven't touched on yet, which is long-term, but maybe not as long-term as we think in terms of the horizon, is autonomous driving. I think that could be a game changer for Uber. This is a company that's really leaning into that. They've secured multiple partnerships and are really, working to achieve that. Whenever you look at gross bookings and how much they pay drivers, those drivers are probably their biggest expense. And so I think that as things shift more to autonomous driving, this is a company that's set to benefit. Andy and I were talking before the show, and we joked that, moving forward, we might have to put Uber and Tesla on the chart instead of Uber and Lyft, just because of how hard Uber's, kind of leaning into this and the potential market of autonomous driving. So I think that in that lens, yes, we do like the developments that we're seeing. I can't really speak to their near-term profitability. That's not really where our data shines. We look at just overall consumer usage and consumer growth. And from our perspective, we do see more consumers who, whenever they have the choice, are turning to Uber. And we are starting to see some traction that Uber is making, even market share gains in the delivery market. Whenever you talk about food delivery versus a larger competitor like DoorDash. So I think that's positive as well. So our data shows that on the consumer front, Uber is doing really well. Now on the execution front in the near term, I think that that's a larger question mark.
Yeah, I don't fit into Kevin's demographic there as far as Uber and people without cars, but I like to, take an Uber out to dinner so I can have a few tipples at dinner and use it for the airport, Megan. But when you look at happiness levels, have you seen any decrease in any happiness levels, or is this adoption of Uber becoming ingrained in society for everyone where, hey, profitability is only a matter of time, a consistent profitability, and their happiness levels remain at a point where, hey, people aren't going to move away from this type of platform?
Yeah, I think that they have cemented themselves as like a needed service versus just a want to have. I think that from a consumer happiness perspective, Uber and Lyft, I will say these are some of the lowest end whenever we look at these happiness ratings. Both of them, I believe, are right around 50% positive. But, people more often are likely to talk about their negative experience with an Uber than a positive experience. The key for us is that Uber's happiness has remained stable, especially as it increases in mention volume and as it grows its market share. I think that that's key looking ahead. And you can see here it is doing a really good job of increasing that buzz. Those mentions are up by about 32% year over year, right in line with the stock price. So I think whenever you asked earlier, is it justified? Our data looks like it's pretty justified almost exactly. And we do like the long-term prospects here.
Now, they don't have earnings for a few weeks here, Megan. If you guys did have an earnings score, I mean, typically we've seen a lot of divergence between maybe some of your data and the stock moves, but this is right on there. So where are you guys at here?
Yeah, so, we're neutral. I would say cautiously bullish is kind of where we're falling, and we'll track that. I think earnings are due out in the beginning of November, so we've got a couple weeks. We'll see if that moves the needle at all, but our long-term signal is definitely bullish on this name.
Longer term bullish, relatively neutral near term. All right, great stuff. Great data as always, Megan. Have a great weekend.
Thanks, guys. You too.
All right, that's Megan Brantley, Vice President of Research at Likefolio, breaking down the sentiment data